Another consideration is one must be careful about double funding. We've heard before about other schemes which are available. One of the schemes which was going on concurrently with Jeremie is the Microinvest. Microinvest started in 2010 and was supposed to run for 2010-2011. It's been extended 2012. It's probably going to be extended 2013. And so Jeremie and Microinvest and other EU schemes, ERDF schemes as available. We've seen there was one now because they were, then they stopped, then they start again. One has to be careful that one does not get double funding because you cannot fund capital expenditure under Jeremie and at the same time claim the 40% microinvest tax credit. So you decide what is best for you. Microinvest is a scheme of tax credits which is based on capital expenditure and based on new employment. So you might, if you have a new project, go for Microinvest on the employees' wages and use Jeremie to finance the capital expenditure, but you cannot, as such, apply for both, especially in the capital expenditure bit. You might be able to finance, to apply for Microinvest on the 20% of the capital expenditure which is not financed by Jeremie, but one has to be careful then that Jeremie is financing 80% of the project, but that 80% is a specific thing. So let's try and make it sort of a simple thing. If our project involves buying 5 vans, then we might be able to tell Bank of Valletta that the project is for 5 vans, and we're putting up the price of 1 van, which we finance 100% ourselves, and the other 4 vans are financed by Bank of Valletta, and then we would apply for Microinvest under that 1 van. But in other things, when we're buying equipment, when this project is a complete project, this sort of simple explanation, like I did about the vans, gets complicated. So one must be careful about this double funding bit because there's the de minimis regulations, which are 200,000 over 3 years as benefit, which one can't get more than that from the EU. And also that then once we are valuing the Jeremie, what's the value of the state aid under Jeremie, it is 13% of the value of the loan. So, in the case of second-hand assets, one must prove that this asset has not already benefited from EU funding. This is a bit difficult to do, but anyway, we're getting around it by declarations from the owners or previous owners or the dealers themselves that there was no previous benefit under EU funding.
National and EU funding.
National and EU funding.
National and EU funding.
Now let's go through the case studies. I have 4 case studies. They're just mathematical computations of typical borrowing scenarios. So we've got the Jeremie and standard and some comments. Capital expenditure of 400,000, owner's contribution would be 80,000, and the loan amount would be 320. And the term, in this case, I took 7 years. I took an interest rate of 2.5% under Jeremie and 3.5% under standard, so there's the 1% difference. Loan repayment is slightly less under Jeremie. It's the 4,450 instead of 4,602, 1,452 less, which is obviously the interest, which is being saved. So you're saving 152 euros in interest per month, totaling 12,800 euros over the whole period. So over here, the pricing was important also because 13,000 euros is also a good sum of money. However, if you look at the last line, where there's the market value of the security, under Jeremie, all we needed to put up was 115,000 euros. And that is significantly lower than the amount of 455,000 euros, which one would have to put up under the standard loan. So this is what we were saying about accessibility mainly before, because you've got less than a fourth over there. Case study 2 is like for a smaller amount, over 10 years. In this case, we're seeing the interest saved, 3,000 euros. And once again, the market value of the security, 17,000 euros with 68, as against 68,000 euros. At this stage, the bank might even consider it unsecured. If you are a normal client, you've always repaid your loans on time, you might actually be able to negotiate that there's no security, no hassle, no notaries, no researches, no nothing. Case 3 is a bit of a comparison between Jeremie and CPL, commercial property loan. Over here, we're not really comparing like with like, but I just like to highlight this because there are significant interest savings for 2 reasons. Number one, there's the interest rate difference, and there's the fact that under Jeremie, you'd be paying over 10 years and not 20. So obviously, one has to take that into account. But in this case, the total interest saved would be 191,000 euros. Now, we're talking of capital expenditure of 500,000 euros. As owners, we're financing 100,000. The loan is for 400,000. But one's over 10 years, one's over 20. If you can afford the loan repayment, the higher loan repayment now because we're paying over 10 years, of 4,000 euros, then in that case, you're going to save a lot of money on interest. For 2 reasons, I stress. One, because of the difference, so it's cheaper, and also for the fact that we're paying quicker. If we look at the market value of the security, once again, we're only putting up 145,000 euros as security of the 500,000 euros property which we have purchased. Under the commercial property loan, we would have to put up 500,000 euros, the whole market value. Now, this would become a very interesting proposal because, as we've said, Jeremie finances capital expenditure. But usually, business would also want some form of overdraft. So in this case, using the same property which was financed under Jeremie, you can offer the same immovable property now as security for your overdraft. And you can do this using just this commercial property that you've purchased. You don't need to put up your own residence in this case because you've just got this one property taken up. And that, I think, is a very big advantage of Jeremie in situations like this. Now, the fourth and last case study would be in the case of cash cover. It might be possible to borrow 100,000 euros by having 40,000 euros cash available. So quite easily, without doing any hypothecs, without doing anything, if your project is good, so it's approved by Bank of Valletta, and they would accept the 25% security as being acceptable in this case because the project's okay, with your 40,000 cash or government bonds or whatever, you could use up 20,000 of them as your owner's contribution. That would leave you with a loan of 80,000 euros, which you would have to put up security of 25%. In that case, you use up your other 20,000 euros, which you could pledge to the bank, and in that case, the bank would be able to give you the 100,000 euros as loan. As with regards to loan repayments and the per month and the interest rates and all that, that would be something which would have to be discussed with the bank. It's not something which is a sort of standard which I could put down on my slide. So that's the end of the presentation. Thank you.